Hi, welcome to our YouTube channel. Today we'll be looking at market structure and what market structure is all about. So we need to understand market structure is the simplest form of price action in the market. It's the basic support and resistance level on your charts, which brings about swing highs and swing lows in the market. So we said market structure is the simplest form of price movements in the market. It's the basic support and resistance level on your charts. It brings about swing highs and swing lows. Now, what do we mean by swing high and swing low? Looking at when a market makes an upward move and gives us a pullback, this is known as a swing high. This region is known as a swing high. So, this region is known as a swing high. Then, while after an upward move next, this is known as your swing low. Here we'll have a swing low whenever the market pulls back down and it repeats like that. So this is what gives us the market structure: swing highs and swing lows. So this is a low, this is a high. On Euro JPY, using looking at 30 minutes time frame, we'll have the market gave us a rally up. At this point we'll have a swing high and it pulled back down, giving us a swing low, and it rallied up again, which gave us another high and pulled back down, giving us another low. We also need to understand that these are levels which are easily identified in the market. So market structure is a trend following tool that traders use or follow based on how an asset moves from bullish moves to bearish move, in between with ranging moves in the market. We'll be looking at this different market structure. We also said these are levels which are easily identified and hold until they don't. Market structure is a trend following tool that traders read and follow based on any assets. We have three different market structure, which are a bull trend, a bear trend, and a sideways trend, which is also known as a ranging market. On the bull trend, the market gives us higher highs and higher lows, while on the bear trend, the market gives us lower highs and lower lows. Then on the sideways trend or the ranging market, we'll have equal highs and equal lows, and we'll look at each of them for you to understand how they are being formed whenever there is move or movement in the market. So let's go to our chart to identify these trends. Here on EJ Euro JPY, we'll have a bull trend, which is a bullish market. At this point, the market rallied up, giving us a higher high. It pulled back down. At this point, it gave us a lower high, gave us another rally, which we got a higher high, which means this high is higher than this previous high, while when it put back down again, giving us a lower high, which means this high is lower than this giving us a higher low, which means this is higher than this previous low. It kept on doing the same thing, gives us a rally, a pullback, rallied up again, give us another pullback. So this is just a simple explanation of a bull trend. So on a bullish trend in the market structure, the bull trend forms higher highs and higher lows. higher highs and higher lows. That is what makes up a bullish market. So we get higher highs and higher. This is how a bull trend is being formed. You get a higher high, higher lows, higher highs, higher lows, higher highs, and higher lows. Now, on a bear trend, the opposite is it. On a bear trend, the reverse is the case. On a bear trend, we'll have lower lows and lower highs. So whenever the market gives us lower lows and lower highs, it means the market structure has changed to a bear trend. Now this happens most of the time. So you're either having higher highs and higher lows for a bull trend, and lower lows and lower highs for a bear trend. This is always how you get your bear trend structure. Let's find out from EJ. Okay, now this is when our trend changed. We said the market gives us lower lows and lower highs. At this point, we got our first lower low, and the market pulled back up, giving us a lower high. Pulled back down again, giving us another lower low. Rallied up, giving us a lower high. The same thing happened here. This is our lower low, our lower high, our lower low, and we got another lower high down to this point, which is our current low in the market. Another thing we need to understand is this: market structure and price trend can be different depending on the time frame chosen by the trader. So if you're a day trader, you may see a certain trend on a daily chart, then on an intraday chart it will be completely different. What do I mean by that? Let's say, for instance, we are on a 30 minutes time frame. We are seeing this market structure. Now if I move down to 5 minutes, you see a different thing altogether. So for someone who is an intraday trader, if you get your market structure um from your daily charts, and you come down to your, what's it called, your smaller time frame, your chart is going to be different. Your market structure is going to be different. So you need to understand this. So your chart pattern, or your market structure, is based on the time frame you're trading currently. So you need to just understand that, okay, if you're looking at a 30 minutes time frame, you're going to get the structure on a 30 minutes time frame. Then on a smaller time frame, you might be looking out for your entries, and knowing fully well that when price gets to this certain point, it's going to this is what's going to happen. So that's the whole essence of you understanding market structure. For the bull trend, market gives us higher highs and higher lows. For the bear trend, market gives us lower lows and lower highs. Now for a range market, or a ranging market, we get equal highs and equal lows. What do we mean by that? At this point, this is a ranging market. What it means is, whenever price goes up and it comes down, we have an equal high at this point, and we also have an equal low. And we're going to look at how to trade using this market structure. What happens when price gets to this point? What happens when we have a ranging market? All you need to know what to do at this point. So we're going to look at that on our charts. So the next thing you need to understand is this: while finding your way to price action, you need to understand that, okay, for a position trader, you're looking at the monthly time frame down to the weekly time frame next to the daily time frame. While for the swing trader, you're making your analysis from the daily time frame down to the 4 hours and the 1 hour time frame. Then the short term trades, you're taking your 4 hours, 1 hour, and 15 minutes. Then for a day trader and a scalper,
you're looking at 1 hour time frame, 15 minutes and 5 minutes. So we're going to look at how um, we're going to mark out our swing highs and swing lows, and how to take trade using this market structure. We'll be looking at how to identify these structures. We'll go to our chart. So all you need to do is, let's take for instance, you met